Good day, YouTube. This is J Money with Falling Forward Financial. I've talked about Amazon splitting a couple times, made a couple videos about them. I believe in June. Google's also going to be splitting, I believe in July, or maybe I have them backwards. One's in June, one's in July. Anyway, I made videos about both. You can find those in the description. But this is Amazon stock split. 3 more companies that should follow suit, and I would love to see all 3 of these, especially one, follow suit. This just came out today, this morning, so found it kind of interesting. These stocks are all trading at more than $500. Amazon recently announced a stock split. It's first since 1999, which is just amazing. And the stock has been rising up hundreds of dollars since the company released the news. When there's a stock split, your investment's overall value doesn't change, only the number of shares and the new share price. Benefits of a stock split can make it a high price stock feel more accessible, especially to investors who can't or don't want to buy fractional shares. As I like to point out, on Robinhood, you can buy fractional shares. Schwab, I have an account with Schwab. You can buy fractional shares there. I believe they call them slices. So a stock split also puts a company into the news for positive reasons, namely that its business is doing well and its share price has risen enough for the split makes sense. And you wouldn't expect to see the stock split from a company whose shares are trading at just $100. So Tesla split, Apple is split. I have both of those. Both deployed stock splits last year, and both benefited from a surge in the trading activity upon doing so. The chart shows below. So Apple, back in July, looks like it was right in here, and this shows the split, and then how it ran up and came back down a little bit, but was still higher than right in here. So, and here's Tesla's 30-day average daily volume and change. Back in July, again they announced the split, and it just ran up, dropped off again. Probably a lot of people took profit, but it ran up again and then up and down, and it was just kind of volatile, but it was still up again, higher than where it started. So. But 3 other stocks that you should consider following suit and split shares are Regeneron Pharmaceuticals, ticker REGN. Costco I would love to see them split. I think they were right at 500 a while back, a week or two ago, and now they're, well, right here at 558. And Shopify, their business are all solid and at a lower price tag that might attract more investors, so that would be cool if they all split. So Regeneron right there is at 679, and here's Shopify at 705. So Regeneron Pharmaceuticals, Regeneron is a stock that's doing well despite receiving some disappointing news earlier the year. In January, the food or FDA announced that it was limiting the use of the company's monoclonal antibody treatment, RegenCov, due to the ineffectiveness against the Omicron variant 19. In 2021, the drug generated more than $6 billion in revenue for Regeneron, accounting for 38% of its top line, which totaled $16 billion. However, even with the excluding sales of RegenCov, the company's revenue still rose by 19% during the year. So you can see the chart here, Regeneron Pharmaceuticals. So looks like it hit a dip there at 427, back on 411 of 17. Ran up. So this one's kind of up and down, kind of all over the place. I don't have this one. I don't have a lot of pharmaceutical stocks. Just for that reason, I have Pfizer, and that's my main one. But their market cap on Regeneron is $71 billion. Days range is 666.35 to 680.08. 52-week range of 451.60 to 697.01. Volume of 402,000, average of 744,000, And so not that much, probably just due to the price of the stock. So not a lot of people can afford to trade this one. So, and with the 11 phase 3 trials in its pipeline, Regeneron isn't in danger of running out of growth opportunities. Trading at an incredibly low price-to-earnings multiple of less than 10. Stock is a steal of a deal. Average stock in the healthcare sector, Spider Fund, trades at 23 times its profits. Even based on future profits, Regeneron stock is trading at less than 16 times its earnings. So, and here's the P/E ratio. So you can see back in 18, it was up above 60. Kind of came down to below 20, back up about, we'll just call it 25, 30-ish here in 2020, and currently at 9.6. Next is Costco. I've had their stock for 4 to 5 years, and I believe it's doubled since I've had it. So Costco isn't nearly as cheap of a buy as Regeneron. Investors are paying a multiple of 45 times earnings to own a piece of its business. That's relatively high, regardless of which industry you're considering. But one of the reasons investors covet the stock so much is that Costco does well about any scenario that it touches. In the pandemic, it becomes one of the one-stop shop for people loading up on day-to-day goods. In an inflationary environment, it's less vulnerable than a discount retailer or a dollar store focused on ultra-cheap goods, where it would have to worry about a backlash from raising its prices to a modest amount. So, as I've said, pretty much the only two places I really shop are Walmart and Costco, and majority of it probably at Costco, but the just good value and good quality. The proof of the company's success is in the chart, as Costco's quarterly revenue has soared by 80% over the past 5 years. What's even more impressive is that the profits have risen even higher rate during that time of 86%. So here in the purple is Costco revenue quarterly change, and the orange is net income quarterly. So, and you can see how they've went up quite a bit in the last 3 to 4 years. So at over $550, the shares of the retailer traded at all around all-time highs. A great way to remind investors of how successful Costco has been operating in recent years. Could be announcing a stock split. So, and that would be cool, because I would like to buy some more Costco. Next is Shopify. If there's one stock that needs some positive news badly, it's Shopify. The e-commerce company went from being a darling on Wall Street that could do no wrong to suddenly being an ultra risky investment that investors can't seem to stop selling. And I've noticed that. That's why I haven't touched it. So I've just been watching it. But the S&P is having a rough time, as it's down 6% year to date. But that's nothing compared to Shopify, which has seen its share price cut in half, without it even having to do a stock split. But at more than $700, its share price could still be too high for some investors. When it last reported earnings, Shopify warned investors that the revenue would drop as the 19 restrictions loosened around the world and things returned to normal. And it's not unfathomable projection, given that as people more options, they might spend less online and more inside brick and mortar stores. So, but everything's online, so I'm sure this one will go back up. So I would just wait and see. But there is some risk around Shopify, especially given the exposure to China, where 19 is a growing problem and case numbers are rising. In January, it announced it would be partnering with a Chinese company, JD.com, which would make it easier for a merchant in the United States to sell to China. But the 19 didn't derail Shopify's business before, which suggests to me the bearishness stems from the news of a slowdown in sales for the company. So a stock split could help remind investors along with the chart. And so we'll just have to wait and see. But here's their PS ratio change in the last couple years. So you can kind of see the run-up, and then it's down a little bit again. And here is their revenue. So it's been going up substantially here in the last 4 years. So although growth of Shopify will slow down this year, that doesn't mean it's no longer a top growth stock to own. Analysis from the Grandview Research Project that the global e-commerce market will continue to grow at a compound annual growth rate of 14.7% through until 2027. So again, it's online, it's e-commerce, so it's got to go back up. But if you have Shopify, you can leave that in the comments, or Costco, or Regeneron, and which one is your favorite, and if you could leave what your cost basis is, that would be interesting as well. But like I said, I think this one was just at 500 just a while back, and now it's back up to 558. So Tesla had a great day, and so did Apple. So, but that is 3 companies that should follow suit. And if there's any other companies out there you would like to see split, you can leave that in the comments as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.